Good afternoon. My name is Larry Ray. I'm the President and CEO of American Manganese, Inc. I'm here to tell you today that American Manganese could possibly bring in the lowest cost electrolytic manganese metal mine in North America. It'll be the first one in the past few decades. What is manganese? Well, you can't have a steel industry without manganese. If you don't have manganese, you don't have steel. If you don't have steel, the world stops. North America has no manganese. We depend on our neighbors and other countries to import our manganese, and it just doesn't make any sense we don't exploit the resources in our own country. So I'm here to tell you that we are moving ahead with the feasibility study, we're moving ahead with the environmental studies, and we're moving ahead with a massive drill program in order to build the American Manganese, Inc. into the first primary electrolytic manganese producer in the United States. Please visit our website at americanmanganeseinc.com or call us at 604-531-9639. Thank you.
Welcome back to the Money and Wealth Show. I'm Sterling Fox. We're on location in North Vancouver this weekend to talk to Garth Turner, who is coming back to BC a few more times over the summer and will return to speak at the Howe Street Money Expo shows in Kamloops and Kelowna in mid-September, and howestreet.com is the place to go for more information on that and to include yourself in one of those Turner appearances. Garth, we talked a little bit about taxes, but I want to, and we'll come back to that, but I want to talk real estate. This is an area of focus that you spend a great deal of time on. You travel the length and breadth of Canada constantly. You're in one of your least favorite Canadian markets, Victoria, Vancouver, when
Absolutely.
it comes to real estate realities.
You're all crazy.
We are happily crazy, thank you very much, and somehow or another managing to survive in spite of all of this. But as we look ahead, the prospects aren't very bright. What do you see?
Well, I see turmoil. I see a whole bunch of reasons why if I owned $1 million home in Vancouver, I would want to put that sucker on the market as quickly as possible. I just see no long-term upside for overpriced real estate markets. I take a look at the kind of things we talked about in the last segment, and that is you've got a lot of volatility in the world. You've got trillions of dollars in wealth that are being evaporated in financial markets right now. That worries people. And you've got interest rates inevitably will rise. Maybe they'll be depressed a little bit now because of the deflationary impact of what's happening in Europe, but inevitably they're going back up again. They can't go any lower. You've got new taxes coming in. You've got turmoil around the world and many unsolved situations. And let's face it, the Canadian economy has not actually been growing at gangbusters. We've got unemployment that is still very, very high.
Right.
We shipped a lot of jobs to China and India, and we just haven't replaced them. So I see no real reason, because family income is not going up, no real reason why real estate is going to retain its value. Before taping this, I had a meeting with a couple who don't live very far from here, who have a home they bought for $295,000 11 years ago, and it's now worth $1.1 million.
Unbelievable.
They're in their late 50s. That constitutes the bulk of their net worth.
As is the case with many Canadians.
Exactly.
Yep.
And they've put all the money from all of their lives into that house.
Sure.
If they don't get rid of that house at this particular apex of the market, I think they're going to stand to lose a lot of money. And my advice to them was, don't waste a minute doing it. That is a once-in-a-lifetime opportunity for people in this market to grab a capital gain that they'll likely never see again. So if the market starts to decline, let me just put it this way. The last time we had a serious decline in the Vancouver market, it took 11 years to come back up and get to that point. In Toronto, it took 14 years to get back up to that point. In the United States, they went off the edge of the cliff in 2005. Here we are in the middle of 2010. They're still going down.
That's right.
So if this is the long-term trend, what happens after markets peak, you don't want to be anywhere near this market for the next few years.
Well, let's talk about the United States, because you're quite right. After 5 years of a downward trend in housing prices and real estate realities anywhere in the USA, they still haven't found bottom yet. Prices are still declining.
Yep.
What lessons are there in that sorry mess that Canadians ought to be paying more attention to?
I think the most important lesson is that an asset bubble, when it bursts, has long-term consequences. It takes a long time to build back up the trust in that asset. In the United States today, surveys show us about 72% of Americans believe real estate is a bad long-term investment. In Canada, the most recent Royal Bank survey told us 90% of Canadians believe it is a good long-term investment.
Sure.
Okay, there's quite a disconnect, right?
Yep.
Why do Americans feel that way? Their pendulum swung that way because they're really ticked off at what's happened to their net worth. It's been destroyed. Here in Canada, real estate has created net worth. We're happy with it. So we need to understand that when these bubbles burst, it takes years and years for people to regain the confidence that is going to be shattered. And sadly, I think unless people start waking up and understanding that this is an unreal situation, that we'll have a long period of recovery here.
You mentioned in the first segment of today's show, you alluded to a correction that could go as high as 30%. Back in February, when you joined us for our very first program, you were consistent, if nothing else, Mr. Turner. You were talking 20 to 40%, saw it off at the middle, and there's your 30 again.
Yep.
So you really haven't altered your predictions for downward trends. Is that a 30% decline in prices across Canada, or unique to markets like Victoria, Vancouver, and Toronto?
Victoria, Vancouver, certainly I think are going to lead the hit parade for declines, because it's like Vegas or Phoenix, Arizona, or Miami. Those parts of the United States went up the most in the Sun Belt.
Right.
You know, the climates where the boomers wanted to live,
Mm-hmm.
they have come crashing down the most. And I think the same argument can be made entirely for the Lower Mainland and Victoria. So I see actually more decline happening here than elsewhere. Toronto is going to take a bit of a hit, but let's face it, there's 6 million people in Toronto. There's more of a kind of internal economy than
Sure.
there is in much of the Lower Mainland. Particularly in a smaller city like Victoria, I think that's where you can see the most radical price fluctuations.
And we've seen a change in the supply-demand dynamic as well,
Absolutely.
because
Yep.
in February, again, back to our very first show, there were more buyers than sellers
Yep.
on the market, and that has changed quite dramatically.
Yep.
There's a surplus of listings and a paucity of buyers.
Yeah, exactly. And the one overwhelming factor, more than any other, is supply and demand. And real estate always is extremely sensitive to that. We had in the month of April 100,000 new homeowners rushed on the market. And in April we had 52,000 sales across Canada. 200,000 houses didn't sell.
Right.
And there's now a 5-month supply of homes, which is the highest we've seen for quite some period of time. That is going to really increase dramatically. So I'm thinking people are watching shows like this. They're looking at all the for sale signs popping up in their neighbors' lawns. And if you've been thinking about ever, grabbing that brass ring and getting those capital gains, it's the time to do it now.
Right.
That's what people are thinking.
And if you're thinking of selling, and you're certainly counseling people to do just that, it's all about price, isn't
Yep.
it? And you may not get that dream reward that you were hoping for when you bought the house and watched the marketplace grow, but price it right and you can still unload it, right?
Oh, absolutely. There's only one thing that sells a house, and that's price. And if your house is not selling, you got the wrong price. Simple as that. And today, when we've got so much new competition coming on the market, the longer that your house is sitting amid growing competition, the more pressure there's going to be downward on prices. I think it's going to take a number of months before we really see this, Sterling, because if you listed your home today, you're probably going to give it 60 or 90 days before the listing expires.
Sure, yeah.
You relist, you haven't sold, then you drop the price. So I think we're probably getting closer to the end of the year, and that's when, if you're a vulture, that's when the fun starts.
Our guest this week on the Money and Wealth Show is Garth Turner. We'll talk mortgages and taxes when we come back after this break.